Joining us to discuss the pound, the dollar and the euro after another interesting week in the markets is Bob Mason from FX Empire. Bob, thank you very much for joining us today. Let's get things started with the first question. So following a rise in UK inflation, the pound struggled against the dollar. How would you sum up the sterling's week and where do you see it going next?
Well, it's been pretty dire this week for the pound. I mean, we saw inflation shoot up to 3%. That was followed on by the new deputy governor of the Bank of England that said that he wouldn't be voting for a rate hike in November. The markets are pretty much priced in a rate hike in November, but there's a bit of debate now. I think we saw UK wage growth continuing to lag behind inflation. So I think the BOE's in a bit of a predicament because obviously there's been an increase in household debt. So if they start looking at increasing rates, okay, they're curbing inflation, but inflation is not going to drop off anytime soon, even with a rate hike. There's a lot of other factors that are influencing the pound, particularly Brexit and issues faced by, Theresa May and UK politics. And as we saw with UK retail sales yesterday, the numbers were pretty poor. I think we're expecting sales to begin to drop off, and they certainly have. So I think pound weakness is certainly there. I don't think we're going to see any upshoot. I think, focus will now be on, the outcome of the EU Brexit summit, which ends today. And as we've heard from Juncker countless times, he's pretty, aggressive towards the British government and always sort of downplaying the progress. So I think we can see the EU, trying to strong-arm the British government quite frequently going through the negotiations, which will be the negative for the pound. I think the only upside could be, the budget next month. If Hammond sort of surprises the markets and sort of gives a ray of hope in terms of, taxation and, easing sort of pressure on, particularly on the younger in the UK, which could support some spending. But yeah, I mean, it's looking pretty negative at the moment.
So let's go from the UK, hop across the Atlantic and look at the Canadian dollar gained against the US dollar this week following some positive manufacturing data. However, there was a small NAFTA setback. What do you see as this setback having an effect on this pair?
Yeah, I think that there's plenty of market sensitivity towards NAFTA. Obviously, Mexico's so the noise that comes from the talks may not be completely orientated and focused towards Canada. I think a lot of it is largely priced in, though the issue is that there's just this constant delay when it comes to the talks. Talks are now on hold until next month, and we're expecting, negotiations to keep going through till first quarter of next year. So it's really sort of dragging out. I think from an economic perspective, obviously Canada's doing pretty well. As you said, the PMI numbers were solid. We saw them raise, the BOC raised hikes, the rate hikes last month, and we've got the BOC next week as well. Obviously today we've got inflation figures and retail sales, both of which are sort of loony positive. So I think while there's a negative sentiment towards NAFTA, I think for now pretty much priced in. Yeah, we're going to get some dips, but as we've seen, the market keeps going in on the dips because the macroeconomic outlook remains positive. We've got the uptick in oil prices. You got Brent that's sitting up around 58, and we've got a hawkish Bank of Canada. So all things considered, if oil prices stay where they are, there's going to be more debate in terms of whether the BOC is going to do more. So okay, NAFTA is a slight negative, but the macroeconomic outlook, the policy outlook, is definitely loony positive.
And finally, with troubles in Catalonia still sort of hanging over the euro, the currency reached a 3-day high yesterday. Do you see this trend continuing?
Yeah, I think, okay, obviously the Spanish government had revised down its growth projections for next year for, based on the fact that Catalonia accounts for 20% of Spain's GDP. And, when considering the fact that Spain's the Eurozone's fourth largest economy, that's a fairly sizable chunk. But with all the issues that are going on, it is still very much Spain focused. It's not really hit the alarm bells of the EU yet. I mean, I think if we see, similar populist movements in other parts of the eurozone because of what's going on in Spain, then then things could begin to shift. From a policy perspective, we've seen the euro take a bit of a hit because of last week's leaks in terms of the ECB's plans on tapering. I think the markets were a bit disappointed about the asset purchasing program being halved. Economically, obviously we've seen pretty positive numbers. And the ECB is meeting next week, and we're expecting to get the details. So there could be more upside for the euro if the ECB surprises the markets with something a bit stronger from a tapering perspective. I think for now, yeah, the Spanish government are looking to invoke Article 155 on the weekend, which means that the Catalonian government will lose some of their sort of powers. How much disruption there will be because of that remains to be seen. If we start seeing protests and stuff like that, then the euro could take a bit of a knock. But let's not forget that the euro is also a funding currency. So while risk-off sentiment in Europe is a negative, risk-off is also putting capital flows back into the euro. So that's providing some strength. And then on the flip side, we're looking at the dollar. You've got Trump finally looking like he's about to deliver on one of his election promises with tax reforms. There was some progress last night, so we could see a revival in the dollar, which could ease pressure on the euro a little bit. So I think Catalonia is slightly over the moment, but let's see what happens across the eurozone in the coming days and what happens on the weekend.
Bob, thank you very much for speaking with us. It's a pleasure as always.
No problem at all.
And thank you for watching. And if you like this interview and would like to find out more, be sure to head over to dukascopy.tv.